Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate gibberish. Today we're diving into a report from Parsons Corporation. It's a bit like when your GPS suddenly reroutes you, but instead of traffic, it's about a government contract that got a little complicated. Before we jump in, if you find value in understanding these corporate documents, make sure to subscribe. Also, join our Discord community linked in the description below. It's a great place to discuss these topics further. This report, called an 8K, is a snapshot of something important that happened to Parsons Corporation back in June of 2025. Think of it as a corporate aha moment that they had to share with investors. The main event here is that Parsons is changing its financial predictions, also known as guidance, for the year 2025. Why? It all boils down to a confidential contract, a contract that's now facing uncertainty because of a reorganization, which is like a big reshuffling at the Department of State. Because of this reshuffling, Parsons can't reliably estimate how much work they might get from this contract. It's like trying to predict the weather when the forecast keeps changing. Now let's get to the numbers. This is where things get interesting. Parsons is adjusting its financial outlook for the year, and the table tells the story. First, the total revenue. They initially expected to make between $7 billion and $7.55 billion. Now they're estimating $6.45 billion. To 630 kivekti yabanos to 6 tapniks, let's look at total revenue. If you exclude the confidential contract, so without the contract, the new guidance says $630 million to mikcast that dollars look at total revenue. They initially expected to make between $7 billion and $7.5 billion. To 6 the next, let's look at total revenue if you exclude the confidential contract. So without the contract, the new guidance says 6 to $6.5 billion. The old guidance was 6 2050 billion, says 6 $160 billion N dollars to $630 million. It's a 42 million odd that says $625 billion and $6 billion to $630 million. But here's a twist. If we take away the affect of this mystery contract, they are still making about 17% more than last year. This is because after this deal, the number shows that they are doing quite well. That's good news. Looking at the profit after taking interest and taxes into account, they are expected to make $590 to $630 million. This is about 1% more than last year, so at least they aren't losing money. Now for the cash flow from operating activities, this shows $380 to $420 million. This is a 24% drop from last year. This is an important number. If they are making less cash, it's going to be hard to pay the bills. The company also mentions that they're not giving guidance on net income, which is the actual profit after all expenses. They say it's too hard to predict because of things like interest, taxes, and potential mergers and acquisitions. This lack of clarity can make it harder to understand the company's true financial health. It's like trying to bake a cake with a secret ingredient that you can't measure. Now, let's put this all together. Parsons is lowering its financial expectations because of uncertainty around a government contract. While some parts of their business are doing well, this contract issue is causing a significant impact. The company doesn't want to guess what will happen, so they are being conservative. So what does this mean for Parsons? Well, it depends on how this contract situation plays out. It could be a temporary setback or something more serious. The market doesn't like uncertainty, so this could affect the company's stock price in the short term. On the bright side, Parsons seems to have a solid business outside of this contract. Their revenue is still growing and they're managing to maintain profit margins. This suggests that the company is resilient and can weather this storm and however, the drop in cash flow is a concern. Cash is king, and a decrease in cash flow could limit Parsons' ability to invest in new projects or make acquisitions. All for all, Parsons is facing a challenge, but they also have strengths to rely on. The key will be how they navigate this uncertainty and how quickly they can resolve the contract issue. Alright, that's our breakdown of Parsons' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.